Good evening, everyone. This is John Locke, and welcome to the Locke in Your Success Trade and Market Update for October 7th, 2013. I apologize that the video is a day late. I was at a 50-hour, 4-day NLP seminar over the last 4 days, so I didn't get a chance to put this in last night because I got home so late. So one of the things a lot of people tend to ask me is they say, John, why do you spend hundreds of hours a year on NLP hypnosis and other psychological tools and learning to develop them and so forth? And the reasons are pretty simple. The first reason is because trading is over 80% mental. And this means that as a trader, I get much more value from my time working on my psychology than I do messing around with trading systems. And second, as a trading coach, working with these powerful tools gives me the ability to quickly recognize any issues that my clients might be having, which may be related to the way that they're thinking with their trading. And because I can recognize them so quickly and I have the tools to correct them, then the NLP comes in and we can deal with those issues right away so that the traders can get what they want. And perhaps the biggest reason is that NLP is all about communication. The reality is that you could be taking lessons from the best trader in the world, but that's not going to do you a whole lot of good if that trader's not able to communicate very effectively. So in becoming an expert in communication, I can download information to my clients much more quickly and effectively than most people can, and I believe this creates tremendous value for everybody I come in contact with. Okay, let's get going with our update. And before we get going, I want to just remind you that this presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making specific trade recommendations. Also, any trades and or results covered in the presentation may or may not have been live trades. In the event they were not live, we do the best we absolutely can to make sure that the trades are represented as accurately as possible, and also be aware that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. So if you're watching this on YouTube or SMB Trading, please come on over to our trading blog and join our mailing list. Okay, let's take a look at the markets. We get the benefit of being real time today, which is really cool. If we look at the Russell, and we just take a look at a weekly chart. Last week we were bullish. We actually did set new all-time highs last week. We also had an all-time weekly high close. However, we were generally sideways for the week. And the primary reason for that is we got the government shutdown, we got the debt ceiling coming up, and that has caused the pattern to change. If the pattern had stayed in effect here, we'd be pushing up towards the 1100, and you can see that pretty easily. Russell really wants to go up, and it just keeps getting pounded down by this bad news. So we've gone temporarily sideways. If we get this resolved, that means to me that we're likely going to get a fairly large move up. But now that we've busted under what I have as a projected trend line, we'll probably stay under that for the month. Still thinking we're going to close up here higher. However, the global concerns of the marketplace with this debt ceiling certainly could hold us back and keep us in a sideways trend, or perhaps even maybe set us down to touch a 50-day moving average or something. But my opinion here going forward still remains bullish. As soon as the pressure comes off, the market should be going up. As far as the SPX goes, we just settled down nicely into our primary trend line. And again, I'm still expecting a move up later in the week. The NDX maintains its very strong posture. This also, along with the Russell, has gone into a sideways trend. However, we've been hitting some pretty high numbers on this. So NASDAQ remains strong. And of course, the Dow, which has been weak for the last 2 weeks, relative to everything else, has actually broken its lower trend line, which gives us a divergence in the indices, but to me it's 3 against 1. Unless the SPX starts breaking down, that would give me a bigger concern, but as of right now, just the Dow coming down, not really. It's probably going to make a run for its 200-day moving average down here in the 14.7 level. So we got 3 bullish, well, actually 3 bullish, one kind of, we don't know. All right, let's take a look at our positions. Being away last week, I did minimal adjustments towards the end of the week. Let's take a look at let's go to the October rock position. So here with the continued up movement of the market, if we hit into, we get live results by the way this week, which is awesome. This is where we're sitting right now. We're up 829. Our positive delta is technically too high. I'm gonna let the day play out a little bit, see what happens here. From this position here, we are in 1060 and 1100 butterflies, and like I said, our delta is a little high. What we'll end up doing if we end up coming down into this range is just kind of kicking this back to cat position, and I'll probably let the month play out in cat position. So how did we get here? Let's scoot in the back trader and go to Monday. And as of Monday, we were sitting in this position here with 1060 butterflies, 10 of those, and 5 1100s. During the week, we scaled into the 1100s, and I actually, early in the week, ended up putting on a couple of 1120s, only to take them off later when the market pulled back. So we're starting to get to the point where this is getting close enough to expiration, and it's tight enough with our tight delta that we're starting to get chopped back and forth a little bit in the market. So if we take a look here, you can see on Tuesday, we bought 5 more of these 1100s. We also bought 2 of the 1120s, and then on Thursday, when the market pulled back, we ended up pulling 2 of those back off again. So this is what we look like on Wednesday, which was right here. We were starting to scale into here with the hope that the market, we thought the market was going to close a little bit higher for the month, hoping we'd close up in this area. But like I said, we got the pullback. These 2 came off, and if we come to today, or at least we can go Friday. And this is how we closed out the week, more or less. Right in this position here, and of course with the hard down move today, we're down a little bit of money for the day. Okay, so let's just go over to the October Bearish Butterfly. This also got some stuff earlier in the week, and it was just very simple. On Tuesday, I ended up pulling off 2 of these 1060 butterflies here. If we come back to the beginning of the week here, this was our position. Started pushing too much positive delta on Tuesday with a fairly large up move. Again, into expiration guidelines, this is going to tend to get chopped back and forth. It's a fairly tight position, very high theta position, and the market's a little bit choppy. So that's going to happen, as to be expected. On Tuesday, we ended up pulling 2 of these 1060s off, which we can see in the T-log here towards the end of the day, just to control our delta. We actually pulled 3 of them. And if we just come to today, well, we'll go to this morning. This morning, the position looks something like this. If we go live time, it's not down that much, I don't think. Yeah, the number's more around 855. So the position looks fine. If we get too much further of a down move, then we'll start scaling in back here and do our regular expiration thing. But this is going fine. So far, we have our October M3, which is this one here. Live, this is running up about $2,100. Looking really nice right now. If we get the market to stabilize a little bit, it'll look good. This did get a little bit of chop during the week as well. If we go back to Monday, this is what the position looked like here. And as the market went up, we started doing the verticals here. So on Tuesday, we did some 1070, 1080 verticals to kick our tent out. So if we go to the end of Tuesday, you can see where we rolled those verticals up. And here we sit. On Thursday, we got, I believe it was Thursday. So this was Tuesday. And then on Thursday, we had that fairly good pullback. We bought back 1 of these 1050 puts. And then on Friday, when we bounced back up again, we're getting a little bit of chop here, being in the center of the position. We sold 2 1070, 1080 puts spreads to give us the position we're in now, which is basically going to be this position here, where we sold off we bought back 1 of these puts, so we got 1050, and you can see we're short 5 1070, short 5 1080s, and our current position looks like this. So everything is looking fine as of right now, and hopefully the market's going to just kind of stay stable and make no big moves for us for a little while. Maybe we can get closer to profit target here before we start pulling this out. I may start pulling out early. We're 11 days from expiration. I may not. We'll see how it goes. And the last trade we have on would be our November Bearish Butterfly, which didn't get any adjustments at all. and it's just sitting in here 1/3 entered and is enjoying the pullback, obviously. If we get too much higher, then we'll probably end up having to do a delta theta roll. Even though volatility is picking up, we are getting close to expiration. We may have to roll it up. We don't have an add point here until 1090, so we don't want our delta getting too steep. But that's all the positions for now. Thank you and have a phenomenal day. We'll talk to you soon. Bye.